Okay, I'll check the chat now so I can see where you guys are plugged in from. No, no, I can't seem to find the chat here. All right, great. I'm seeing Dubai. All right, we have 6 persons on this call right now, but that's fine. So, guys, I want us to be very, 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 very interactive because basically what we need to be talking on this call is about trading, basically, right? I want us to be very, very, very interactive so we can be able to get every single information that we need to get while being on this call. So, hi again, my name is Gifty. I am currently in Delta State, Nigeria, and it's good and so amazing to have you guys on here. So, I don't know how long most of you must like have probably been on this on the wealth wave technically. Let's just keep it at that. I don't know how long. Let me know on the chat. How long have you been in this trading space? Let me know on the chat. I'm not seeing the chat. Okay. 1 year. That's amazing. Who else? Over 3 years. That's great. We have 6 persons on this call. At least we should all be interactive. It's better to have less than 10 and be very, very interactive than have like 100 persons and then we're not interactive. Oh my God, this place is hot. Let me see. Who else? Okay, no problems. Let's go with that. So basically, I've been in the trading space for over 5 years now. I started trading in 2020. But when I started trading, trust me, it took me a while. It took me a long time for me to be able to like know something when it comes to trading. Like if I show you guys my chart, the chart that I used to draw out when I started trading previously, it looks so messy. But that's basically the foundation point. So I've been in the trading space for 5 years now. Yeah, I've been trading for 5 years, but my first few years, I didn't really know what was going on the market, but I just had to like stay consistent so I can be able to like get results. And currently it is paying off. So I'm going to share my screen right now. But first of all, what we're going to be talking about today mainly is about trading, right? It's about trading, and this is basically a boot camp about trading. That's why I'm recording this call because more persons are going to come back to watch it. So this is going to be a boot camp about trading. So today we're going to keep it in the basic level, the simplest level. We're going to talk about forex and candlestick pattern. That's basically what we're going to be talking about today. We're going to be keeping it basic. So if you've been in trading space for a very long time, you've probably heard a whole lot of things about maybe fair value gap, order block, liquidity sweep, and all of that. Just keep those ones aside right now. Keep those ones aside. We're going to get into that, but we need to start from the beginner level before we get into the advanced. So every single person can be able to get the information. Because one thing about trading, if you feel like you know too much, that's basically your downfall when it comes to trading. You just need to keep it simple because there are a lot of people that they might not even really need too much information or might not even know much information, but they are really, really doing good when it comes to trading. But there are some set of persons that are perfectionists when it comes to trading, but yet they don't have any result to show for it. So you need to keep things simple. Trading is not really complicated. You just need to keep it simple. Yeah, that's basically what you need to do. So I'm going to share my screen right now so we can like start off. We're going to start off with um let's start off with candlestick confirmation because that's basically what's happening in the market right now. So if you want to like analyze the market, you want to check your charts, you're going to see various things. Let me share my screen so you guys can see. I'm trying to share my screen right now. So, okay. Great. So let me know if you guys can see my screen right now so I can be sure. Amazing. If you can see my screen, please drop a 1 on the chat so I can be sure that you can see my screen. Great. This is basically the first time I'm using this. I just hope I do it very well. So I need to clean this thing off. Okay. No. All right, great. So when you open your chart, right? Trading view precisely. Well, when you open your chart, this is what you're going to see. You're going to see two things. You can either see your chart with the line chart, the candlestick chart, or the bar chart. But the candlestick actually gives you more information, unlike the bar chart. After showing you guys from this place right now, I'm going to show you guys from trading view as well so you guys can understand what I am saying. So when you open your chart, the first thing you're going to see is something like this. Candlestick with wick at the top or on the down, right? And then this candle could be, I don't know if there's a way I can color this, but let's, okay. Are you guys seeing my screen? Let me know on the chat, please, so I can be sure you guys are following. Nope. Trying, okay, great. Trying to color this candle. I don't know how to color this candle. But either way, let's just continue. Let's say we have two candles and then this one, I'm just going to write it up here for a sell. And then we have another candle here for a buy. Don't mind me, I'm not an artist, but I can get better. So let's call this a buy candle, right? This candle signifies what's going on the market right now. That is basically what this candle signifies. What's going on the market right now. So when you open your chart, you're going to see like a lot of candle, and each time frame signifies one candle. On the 1 hour time frame, one candle signifies 1 hour. On the daily time frame, one candle signifies 24 hours. And then one candle on the daily time frame signifies 24 candles on the 1 hour. This signifies 5 minutes. So any time frame that you are basically going to open, that's what you'll be seeing. Each candle there signifies that particular time frame. Now let's go into trading view. So I just stopped sharing my screen here so I can share my screen from my trading view. If you just joined, please mute yourself. Okay. All right. So if you can see my screen now, please just let me know on the chat that you can see my screen so we can get right into business. Can you guys see my screen? Please drop a 1 on the chat if you can see my screen. Amazing. So basically, like I said earlier, when you open your chart, this is what you are going to see, right? When you open your chart, this is what you are going to see. Then if you click on this I don't know how to zoom in. No, I can't zoom in. If you check your trading view, you can also be doing what I'm doing right now. So it will be like practical. So it just wouldn't be as if I am just talking, because the only way for you to actually learn something when it comes to trading is after you learn, or while you are learning, you are implementing, which is back testing. If you watch 100 videos about trading, you watch 1 million videos about trading, if you do not practice, trust me, you are just wasting your time. That's like the plain truth. I'm going to be sincere with every single person on here. If you're watching videos about trading, you are just watching videos, you're not practicing on your own in order for you to like learn something. You will not be able to learn anything when it comes to trading. So if you click here, you're going to see bars, candles, hollow candles, volume candle, line, right? Like I said earlier, we have the line chart. Line chart, you can also use it to analyze the market, but we're not talking about line chart right now. Let's keep it simple, right? Now we have the bar chart, which is somehow confusing. There's what they call is it Hekini candle, something like that. We still have that one as well. People actually use that one to analyze the market. But what we're going to be focused on today is candlestick. And each candlestick you're seeing here actually speaks something. Like I said earlier, one candlestick here on the 1 hour time frame simplifies 1 hour. Like each candle here is 1 hour. Every single 1 hour, a new candle forms. And for a buy candle, right? A buy candle opens below and then closes above. Let me draw it out so you guys can see. Okay. I don't know. I hope I draw this well. Okay. Okay, let's say this is a buy candle. Let me change the color to green. Okay, this is green. Let's say this is a buy candle. Let's draw another one, which is going to be red. Then let me put the wick. I don't know how to go about this wick. But either ways, let's just try and do something. Let's just forget about the week for now so we don't waste our time. So basically, this candle, this green candle you're seeing here, this candle opened below, right? Candle opened below and then closed above. Let me draw it so you guys can see it. You know? Okay. This candle here, this red candle closed below, and then the green candle opens below and then closes above. Good. Okay, very good. I don't know how to draw, but please just manage it. But I just hope you guys are like getting my point. I'm just going to try and make this thing really clear for everybody to be able to understand. Amazing. Okay. Now I just hope this is clear. Now for the bullish candle, the candle opens below. Like a new candle comes in, it starts from below and then it rallies up, right? So but when it comes to the bearish candle, the candle opens above, right? It opens above and then it starts to come down. If you understand, please let me know on the chat. It opens above and then it starts to come down and then it closes below. But for a bullish candle, it opens below and then it starts to go up because a bullish candle is expected to go up. So it opens below and then it starts to go up and then it closes above. That's basically the difference between the bullish candle and then the bearish candle. But now when it comes to candlestick formation, we have different candlesticks, and these different candlesticks, they speak different things, right? They speak different things. I don't know if you guys probably heard about doji candle, bullish engulfing, hanging man, gravestone doji. Like we have a lot of candles, and these candles, they speak different things. Now when let me use this. Now when it comes to trading, right, candlestick is like, how do I put it now? Aside market structure, the trend, and then before, if you want to go into the advanced part where you talk about fair value gap, liquidity sweep, and all that, which we are going to get into, but not today. We're going to keep it basic today. Candlestick on its own gives you, like, let's say, it adds to your confluence because you're still going to look out for other things before you actually go in for either a buy or a sell. But candlestick on its own gives you one confluence. Now, if you go to, let's say, your browser or anything, what you need to search for is candlestick pattern cheat code. When you search for it, you're going to see different candlestick pattern, and also, excuse me, you're going to see different candlestick, the pattern, and what it does. Basically, that's what you're going to see. Different candlestick. We have like a lot of candlesticks, like a lot of them, but you don't really need to master all the candlestick, right? You don't really need to master all the candlestick. You just need to pick the main ones for you to like focus on, and then use it to like add to your confluence when you are trading, right? We have let me click on this, and then you're going to see doji. We have doji, right? We have the gravestone doji. The gravestone doji signifies a bullish continuation, like a, if market wants to like go to the opposite direction, that's what the gravestone doji does, especially when you see it on the support level. But let's not go into that. We have the dragonfly doji, we have the gravestone doji, we have hammer, we have hanging man, we have an
So
inverted hammer, we have
the gravestone doji is when the bullish is what?
no, the gravestone doji signifies a sell, but the dragonfly doji signifies a buy. But we're going to get into that, right?
Okay, okay. Yeah,
So
yeah.
we have the bullish engulfing, we have the bearish engulfing, we have the tweezer top, tweezer bottom. Because most times your analysis might be very, very correct if you are in the space of like analyzing the market or anything. But one thing is actually off because a candle just came in and you don't even understand what this candle means or what this candle is supposed to do. And then before you see, the market just takes you out and stuff like that. Now, this is the weekly time frame. Every single candle you're seeing here forms in 7 days. 7 days, that's when this candle forms. And now this is gold. This is the last candle. This is last bullish candle. It opened below and then it's going to close above, right? It's going to close above, and market is closed already, so a new candle is going to form tomorrow. When that new candle forms, it is going to start from here. So if it is going to be a bullish candle, it is going to start after this current candle that we have right now. Let me mark it out so you guys can see. It's going to start after this current candle that we have right now. And then if market decides to close, that means it is going to close below or it is going to close above. But let's forget about weekly. Let's get down to 1 hour so we can talk more about candle. Now, aside candlestick giving you like information about what to like go in for when you want to like trade the market, there are times that candlestick can actually give you like a confirmation, but you still need other confluence before you can actually enter the market. Let's say when you start seeing a doji, the market starts to go up. Let me clean this thing so I can have space to like draw something else. The market starts to like reject one particular zone. Sellers try to pull it down, buyers try to pull it up, and then all of a sudden the market just closes with a tiny candle, probably with a long tail, and then not a full body close kind of thing. Then price is likely telling you that okay, something is happening. The buyers are trying to like bring this market down, but the sellers are not agreeing. They are still trying to like take this market up. Let's say for an example here now, right here, this is an inverted hammer. Let me draw it out so you guys can see. This candle is an inverted hammer. Okay, can you guys see it? Great. This candle is an inverted hammer. Then when you see an inverted hammer on top, especially on a resistance, it means okay, price is likely trying to like reverse. Now that does not tell you to like go into the market immediately, but it is telling you that okay, something is happening. Then the next few candle that actually forms after that candle is going to tell you, oh, is price trying to like come down or not? So after that candle, the next candles that we had still gave those rejections. Is price still tried to buy, market still tried to like come down, and then we had the gravestone doji. This is the gravestone doji. Let me show you guys. Oh no.
So in this case now, this candle is telling us that the seller is trying to push the price down while the buyer is trying to push it up, but the seller overthrown the buyer, right?
No, the
Is
buyers still try to like overthrow the sellers because market is bullish.
okay, okay.
Yes. So that alone gives you confirmation that okay, I think something is going to happen. So if you are currently on a buy, let's say you entered a buy around this zone here. Let's say you entered a buy around this zone here, this candle here, this short candle here. If you entered a buy around this zone here, that means okay, you should be telling yourself, I think something is about to happen. This does not give you the confidence that okay, market is going to sell immediately. Like I said earlier, candlestick is more like it adds to your confluence, makes your strategy works better because it does not subtract, it adds if you use it perfectly. You understand? So this tells you that okay, probably something is going on here, right? Something is going on here. Then you should like look out for more confirmations. Now, despite the up and down dragging, at the end of it all, we had the gravestone doji, and gravestone doji signifies a sell, right? This is the 1 hour time frame. If you go down to the smaller time frame, you're going to see like a retracement, and then like on the smaller time frame, a retracement, and then a sell confirmation before price started to sell. Exactly, market gave us a sell confirmation here, right?
Okay.
So the market gave us a gravestone doji because you've seen like so many rejections on that zone, so many
Mhm.
rejections due to that candle confirmation, so many rejections. That will tell you that okay, I think price is trying to like do something different right now. And then price gave a gravestone doji, and the next thing the market sold. This sell is basically a retracement because gold is bullish right now, right? Market sold, it retraced down to where it retraced to, and then price started to rally up. So if you wanted to catch a short sell, you would have used this opportunity to like maybe get like 20, 50 pips from gold, and then take your TP and then wait for the buy continuation. So this is basically what candlestick does. And now if you're looking at this place, I don't know how to like zoom this thing more so you guys can see. You're going to see another doji candle. Are you guys seeing it here? Let me know on the chat if you can see it. Let me check the chat if there's any question. Okay, no question. So let me know on the chat if you can see this doji. So when you see a doji, it signifies something, but that does not really mean that, oh, the market is going to like do something crazy unless you see it at a very strong support or resistance. This is the doji candle. Unless you see it at a very strong support or resistance. Now, aside doji, we have other candlestick confirmation as well. And there is one that is like very, very common, which is called the bullish engulfing candle, or you can call there is one for bearish engulfing candle. So this is a bullish engulfing candle. What this candle tells you is that, oh, sellers are already tired. Now we're going for a buy. This is what a bullish engulfing candle tells you. Sellers are tired and then we're going for a buy. For a bullish engulfing candle, you're going to see a red candle, and then you're going to see a green candle that is going to overshadow the red candle. If it closes below, that is not a bullish engulfing candle. It has to be a full body close. Like
Okay.
it has to be as if it is suppressing the red candle for you to know that, oh, buyers are in position, like buyers are like strong in the market. That's basically what a bullish candle does. It signifies that, okay, buyers are in. So with a bullish engulfing candle, you should be more focused on looking out for buys, right? Now let's look out for a bearish engulfing candle. This is a bearish engulfing candle. This is a
Okay.
bearish engulfing candle. Now, when you see a bearish engulfing candle, your mindset should be sellers are in charge, right? But that does
Mhm.
not mean that when you see a bearish engulfing candle, you just go in for a sell immediately. No, that's not how it works. Like I said earlier, candlestick formation is like an addition to other things that you're seeing in the market right now. Number one, it needs to align with the trend. It needs to align with your market structure. Price needs to retrace and do what it needs to do and give you a confirmation that yes, we are going in for a sell or we are going in for a buy. I don't know if you guys understand. If you understand, let me know on the chat.
Yes.
Amazing. Now let's look for something else. What I'm seeing here basically is market structure, but we're not talking about market structure today. Today is basically about candlestick.
Coach,
But that,
sorry, I have a question.
yeah, you can ask.
Okay, I see you mapped out another block over
Yeah.
there. Are you expecting a buy?
No, I marked this out. I think that was like last week. Let me even see if price even got to that zone. Okay, price did not get to
It's
it,
not,
but
you didn't respect.
market, yeah, it did respect, but market still like, but I was like trying to look at for price coming down due to this imbalance that we have here, but price did not. But it's all good.
But it might
Now,
still be a pending kind of thing.
yeah, it might still come down to like tap it, but market is currently bullish, so I'm not expecting it to come down right now.
Right now, yeah, but
In the
definitely too.
future, yeah, it will. So if we are supposed to like look out for gold, maybe a retracement and then a continuation for gold for a buy, but gold is trying to like get back to 33,500 because this zone it touched previously. This is the first time it touched it, so this zone is like really strong unless maybe news or anything makes it break it above before we can start looking out for more continuous buy. But with top down analysis, if price gets to this zone, it could likely buy. Maybe the buy could be for a retracement and then for like a continuation to break. But let's see how it goes.
Mm.
So If you guys understand what I said about the doji candle, let me know on the chat so we can talk about another candle. Yes. Okay. I'm going to give you guys assignment though. This is this is going to be practical based class. This is day one. This is day one. So basically, yeah, this is what candlestick does. But if you understand candlestick, there's one that we call tweezer top, tweezer bottom. We have the evening star, we have the morning star, we have the shooting star. But you don't need to, you just need to like, trading should be like simple. Just keep it simple. That's the best thing. Just keep it simple. Understand like what to like expect when you see like a doji candle, because doji signifies rejection. That's what it signifies. Once you see a doji candle, sometimes you can actually see a doji candle, one doji candle, and then the next thing market just just starts to like go crazy. Okay, now let's use this one for an example. This doji candle here, not just one, we have two. We have the gravestone doji, which signifies a sell, and then the normal doji candle. And then, but though price is falling, and then this was a retracement. This signifies that okay, the retracement is like coming to an end. It signifies a reversal, like market wants to like just turn and just continue going to where it was going. That's basically what it signifies. So with this confirmation, if you go down to the smaller time frames now, you're going to see that I hope I see it. Amazing. If you come down to the smaller time frame now, you're going to like see more confirmation that price is telling you that it wants to start selling. And then if you go in for a sell and then you put your stop loss above the wick a little bit, you would like be able to like catch pips just from using candlestick confirmation and then market structure, because you're definitely going to follow the trend of the market, not against it. You guys understand? Amazing. You can see what's going on the chart. Okay, so we still have time. Let's use it to like get into market structure and trend.
I didn't get that last part, please.
Okay, the
Sorry
last
about.
part I said, no problem, sis. The last part I said, um, doji candle. I use doji mostly because doji most times respects doji and bullish engulfing, because you don't really need to like stress yourself too much about all the candlestick formation. Just
Mhm.
pick, just keep it simple and just pick. I use the doji for an example. Doji signifies reversal. When you see a doji candle at a resistance, it depends on the doji that you see. Not all doji candle we respect. If you see a bullish doji candle, let's say you see like what should I use as an example now? You see like a full body candle, bullish full body candle, and then the next candle you're seeing a bullish doji candle. You're not expected to go in for a sell. That one still shows that buyers are still in control. So
Okay.
imagine you going for a sell and you see a bullish doji candle. Price would literally like take you out because buyers are still very much in control. But when you see that bullish doji candle and then maybe you see some other rejections and then you see some other confirmation, then maybe you should be looking out for a sell. Now looking at my screen right now, this particular place, we have different rejections here. Different type of doji for that matter, because price was just rejecting up and down. Market was
Mm.
just rejecting. Can you guys
Mhm.
see it?
Yes,
Market was
yes, yes.
just rejecting. It was just like going up. Buyers and sellers, they were just fighting. Market was just going up. It was just coming down. When
Mhm.
you see something like this, you just have to like wait to get better confirmation. And then it still aligns with what's going on the market. Though market was still consolidating here because it was just going up and down, but it still shows that buyers are like still more in control. So when market came down here to like take out this low, this is basically a liquidity sweep, just came down to take them out, because if you go in for a buy, you're definitely going to put your stop loss somewhere below here. It came down, took them out, and then it still went back up because buyers were like still in control more than the sellers before price decided to like fall back down. So all these candlesticks, they are telling you something. The reason why like sometimes people lose a whole lot of trading is because they don't really understand what the candlestick is telling. Now imagine seeing a bullish engulfing candle and then you're just going for a sell. No, sometimes a bullish engulfing candle doesn't really tell you, oh, market is going to buy immediately, but it still gives you like an idea. Let's say you see a bullish engulfing candle on the 4-hour time frame. If you see a bullish engulfing candle on the 4-hour time frame, each candle you're seeing here is 4 hour. You have to wait 1 hour, 2 hour, 3 hour, 4 hour for this candle to close. When you see a bullish engulfing candle on the 4-hour time frame, you have to go down to the smaller time frame and see what price is doing there. If price is telling you that, okay, nah, we're supposed to be looking for a buy here right now, and then it gives you more confirmation. So when you get like when you mark out your support or resistance, you check your structure and everything, and then you're looking out for a buy, you see a bullish engulfing candle, you go down to the smaller time frame and then see what price is creating. That will actually give you your entry for you to like enter. So every candle you're seeing here, very important. They are telling you something. You just have to like understand what they are telling you. Now let's go into market trend. We're supposed to talk about this in day two, but let's just do it now since we still have time. Where are my candles?
I think
Okay, great.
you should let us ask question before going to the market
Oh,
structure
okay. Yeah,
so that
that's
we know
true.
whether we understand it or not. I'm
That's
sorry if I
true. So if you have any questions, please let me know on the chat. Or you can just unmute yourself and ask the question so we can go right into the next thing.
Coach,
Yeah.
I have one question. Let's just do this as form of analysis. So now looking at the chart, the trend, and everything,
Yeah.
what do you think markets will do on Monday? Like from the daily time frame, or price broke the weekly high.
Yes.
Yeah. So do you think okay, there's still one high over there? Do you think markets would do a trend continuation, being with the fact that we have the market is bullish? Do you think is anything like what do you think?
Okay. For me personally, I think this is just market trying to take out this position. I
This
think he did. He took it out because swing traders, most of them would like still be holding their sell,
yeah,
and most of
still
their
a
stop
buy.
loss is around
Okay.
here. Most
Okay
of their
then.
stop loss will be around here or even above this 3499 zone. So me
Yeah.
basically, if I want to start trading tomorrow, I would be looking for a buy, but I would not go in for a buy immediately. I would wait
Immediately.
for price to retrace. That's basically what I would do. I would wait for
Sorry,
price to
coach.
retrace. Yeah.
Take it to the daily time frame again. So, so.
Okay. This is the
Okay.
daily time.
Okay. I'm actually seeing this ranging markets
Yes. Price
in
was
this.
just basically going up and down. So not really giving that structure kind of thing.
Is
So
ranging
basically,
same thing as consolidation?
No,
yes.
no. Is the same?
Yeah, it's the same.
They are the
Okay.
same.
Yeah, they're the same. So price was just ranging. So not really. That's why most of us actually hit stop loss because you would be thinking that
Yeah.
market was going to like respect that zone and then sell to just do its thing. And
No, last week market didn't actually respect any zone.
yeah, and this is basically like if you're looking at it from like top down analysis, this zone, this first zone here, let me draw it out so you guys can see. This first zone here,
Mm.
this is the first time price got to this position and then market came down. It's supposed to be a strong resistance, and it was indeed a strong resistance. But once you see that price has already touched a zone more than 3 times, just know that that zone is likely to become weak.
Now this
So
is the
when price,
fourth time.
yeah, so
Fifth.
that's why price broke because it came here and then it was rejected. It came down. It went back there. It got rejected. If you go in for a sell here, you'd make like good profit. It came down. It still went back and price still rejected it. So the more the touches, the weaker it gets. Do you understand?
Yeah.
Yeah, but it's just like, do you guys understand? Let me know in the chat if you guys understand.
Who's that? Can you mute?
Okay. Are you guys following?
Yes, cool. Guys, are you following?
Yes, yes, yes. We are
After
here.
question. Okay.
Alright. So
Okay.
it got to the resistance, because resistance is basically this ceiling. Like, let's say this my ceiling now. If I take something and I hit it, I'm not expecting it to like fall immediately. But if I continue to hit it, before you see it must definitely fall.
Yeah.
So the more the price gets to that zone, the weaker that zone becomes, because that zone is basically a very strong zone, because price has never gotten to that zone before. So it
Before
was really, really strong. So it got there, it was rejected, it came back down. It tried again, it was rejected. It tried
rejected.
again, it was rejected. So now he had to like try again, and then he pushed through. So now that price has pushed through, I'm even looking at more buys. Most times when market opens like this, it will just start to rally up. So that is
Yeah.
likely to, or market will just retrace a bit on the smaller time frame, and then it continues to buy.
Continue
But
to
if price
price.
gets to 34 and 3,500, market is still likely to like come down a bit, because that zone price has only touched that zone once. But the crazy thing is that it only touched there with a wick, not with a full body candle. So it might hold, it might not hold, but we just need to see what happens. But now this resistance has been evaluated. So right now this resistance is now a support. That's what you should look at it out. It is no longer a resistance, because it is not going to hold this candle that is here currently. This candle has already broken through it. So now it is going to form a support. So looking out for a retracement around there to continue buying, unless price just decides to change character. That's where you start looking out for a sell. But for now, anything to look out for on gold is for a buy,
Good.
not a sell.
Since I'm bullish though, I'm bullish. Like I've been mapping out my this thing. I'm still bullish on gold. But
Okay, that's
I want gold to retrace, then I'm not
yeah,
rushing. So
exactly.
that's it.
It
And
keeps you on a safer side.
yeah, and I actually have, you see that week at the top.
Yeah,
Yeah. Normally I actually have, like, if price gets there and it reverses, that means
you
it's
look out
like
for the sell, the
look out for
retracement.
the sale. But I'm not actually going to set anything yet. I'm
No, no, no.
saying if price gets there, I'll see what it has to do there. What,
Exactly.
and the reaction. If it breaks above, I'll chill. And if it breaks below, I'll chill. So that means
Yeah.
this ranging market in this daily time frame, we need markets to break above it because,
Yeah.
right?
Yeah.
That
Once
means
price breaks above it, that means that's a market structure shift. And then after the market structure shift, we just have to wait for a reversal, which is that retracement that we are talking
retracement.
about.
Yeah.
Yeah.
Okay.
So once the retracement happens and then price confirms buy again, then we can go in for
We
a
can
buy.
buy. Okay.
Yeah.
Thank you, Mama.
All right. So, do you guys have more questions? Please let me know if you guys have more
I
questions. Say
said you
that
should
again.
I said you should ask us question about the doji and all that to see to have a teach back and see if we are getting it.
Okay. Yeah, definitely. We're going to like have an assignment for this class, especially with
Okay,
the
assignment.
candlestick.
Assignment will be good.
Yes,
Yeah.
yes. So, because I really want you guys to like be very, very good when it comes to like this trading thing. So the assignment is going to be you using your trading view to like check out like a valid doji, or like an engulfing candle and all of that. And then you can just do one or two analysis and then send to me, or you can send it to the group and then tell us like what you think the price is going to do. It might not actually be for gold, it might be for any other currency pair or anything. Tell us what you think price will do, and then if it does not do what you think it will do, then we're going to like mark out the reasons why price does not do that, so you can be able to like learn from it. I don't know if you guys understand.
Okay. Yes.
Yeah. So
Coach, I have
Abiso,
a
yes, yeah.
question.
Okay, okay. Go on.
Yeah, okay. I'm Muslim doing gold, right? And I just added
Go on.
US oil and I'm trying to add BTC. So I want to ask, I'm like, I don't really analyze currency pair. Is it the same way of doing, like the same way of analyzing gold and all that? Is it the same way or there's another way? I'm curious.
Okay. Basically, it's supposed to be the same way. It's just that, let's say US oil now, it will be mainly about this US thing. Let's say, for example, now this Nasdaq, US 30 and S&P 500, they all move similar. US 30 and S&P 500, they move the same way. But Nasdaq is more like the middleman inside. They move similar, but Nasdaq sometimes just tries to do its thing. Now, 2:30 p.m. Nigerian time, which is basically 8:30 or so US time. There's a way, once the US New York section opens, there's a way this trade they move. Doesn't have to do with anything concerning gold or like BTC or anything. But as long as, even if there is a news or no news, you see these three indices pairs, US 30, NAS, and S&P, they move crazily once it is 2:30. But now other country pairs, they don't do that. I don't know if you guys understand. So, but when it comes to like analyzing the market and all of that, the liquidity sweep, um, candlestick, trend, it is the same thing. You just have to keep your strategy simple. That's just it. It is the same thing as long as you enter the market at the right time. They are the same thing. The same way you analyze market structure for Euro USD, that's what you do with the other pairs. Just that due to the difference in country, maybe Japanese yen and then US dollar kind of thing, that's like, just once their market opens, maybe there could just be a liquidity sweep and all. You just need to like know when that particular trade, when the country, where when they just start. For London section, I think it's not eight or so.
8
Once
a.m.
it is eight, yeah, eight, you know that okay, this is London sweep or anything. This is basically what's going to happen by this time. Now, when it is JPY, oh, Japanese yen, all these Asian countries
Asian
and all of that,
session.
you know that okay, during this time, this is what happens in the market. It's just the time, but market structure and analysis is just supposed to be the same thing. It's just the time for you to, the only time, because if you enter at the wrong time, then that's when you start like experiencing crazy. At least gold now, you know that once you leave London section, cool, New York session, cool, even Asian session, gold is also very, very good. You know that okay, this 3 time gold works very perfect. You know when to expect retracement for like liquidity sweep and all of that. You're safe. But other countries, you just need to like know their time, the time that they open and all of that. So you know when to be on the safe side. That's just
Okay,
basically
so other than the time, the sessions, the trading sessions, like, you mean both the same way we do gold, the same way we do the other pairs, like GBP, JPY, USD, and like UJ, Euro, JPY, and all that, and all
yeah,
the pairs,
yeah. And you need to understand that particular pair.
that particular pair. Yeah,
Let's say BTC now. Let me see if I have BTC here.
I
Okay, this is
can't
very
I can't understand that pair. Let me stick to my gold for now.
BTC. BTC, where BTC is actually very, very, very good is if you I don't know, if you follow the trend, BTC USD. If you follow the trend, just follow what's like going on the market. That's where you like get like good stuff out of BTC. But BTC is
BTC.
like very, very disrespectful, and the manipulation is like too much. I hardly trade BTC, but I always use it to like back test. If I am back testing, I just use it to like practice and all of that. That was why I was able to like mark out that position for BTC. And price is like currently like just doing what I marked out. Now, if you look at the weekly time frame for BTC, you're going to see that price is trying to like react off of this zone, which is this zone here, this zone. Price is trying to like react off of this zone. But if price breaks below here, let's see. Okay, let's say if price breaks below here. Let's say price break below this zone here, then that means we cannot be looking out for a buy on BTC again. But for now, buying is valid for BTC because of this zone. But we're going to like wait to like see how market reacts from here. If price starts to like, because this is the daily time frame, but what I'm seeing here, I feel market might decide to like come down to this zone. I might not even want to like go in for it. If I want to trade BTC, I would not want to go in for a buy here. A buy here would be like a short buy, but it would be safer if you buy below and then you just watch and see if the market is going to break this structure here that we have here. Enjoy that. Let's say if price decides to buy from here now. If you are swing trading, you should just expect price to like create a higher high for BTC. But market might decide to start buying from here, but it might decide to buy a little bit, come down due to what we have here. And BTC might, because of how disrespectful BTC is, BTC might still decide to come down here to take out all of these things that we have here. All these things we have here, come down here to take it out and then start buying from here. So the best thing is to just see what is going on in the market, because if daily is giving us buy, if you go down to the 1 hour time frame or maybe the 5 minutes time frame and all of that, you might not be seeing that buy, because sometimes the 5 minutes time frame, they might have so much noise, but they are still telling us something. You might not be seeing that buy. Like for an example now, what kind of buy is this? I would not even want to buy this market because this is a trap. Bitcoin moves crazily on Sunday evenings. Like if you want to like milk from BTC on Sunday in the evening, that is when you're going to like see like a crazy move on BTC. I'm sure price is going to take these people out here, and then that's just it, because this is like a trap for people. So me basically, I like waiting. That's why I don't trade every day. I like waiting. I would rather wait for Bitcoin to fall. If it gives me a sell confirmation, I'd rather even go in for a sell, wait for it to like fall below before I can like buy. But for going into the advanced part, though, let's focus more on our candlestick training first. So let me know on the chat if you guys have any questions so we can go right into it. Do you guys have any questions? Let me see. No questions at all. Let's talk about market trend and market structure. Market structure. All right. I hope you guys are getting value. If you're getting value on the chat, let me know. If you guys are getting value, let me know on the chat that you guys are getting value. Just one person. We are over 12 people on this call. We're over 12 people on this call. What is going on? Let me remove all of these things. Okay, let's head down to the weekly time frame. So this is the weekly time frame, and if you want to know about market trend, you should be focused more on the weekly time frame. That is where you focus on if you want to know about market trend, right? So we have two, should I say two or three? Most times I even forget we have consolidation, but the main things to look at for, though the three are very, very important. We have the uptrend, we have the downtrend, and we have the consolidation, which is ranging. That's like the kind of market you need to stay away from. And that's what gold is actually doing here right now. It is not going up, it is not coming down, it is just up and down, up and down. That's why most persons are like losing with gold, because it is becoming disrespectful. So now, with what you're seeing on my screen right now, what trend do you think we are on right now? Is it uptrend? Is it downtrend? Let me know on the chat. Are we consolidating the overall trend? Is it uptrending? Is it downtrending? Are we consolidating? Let me know on the chat. Okay, I can see some uptrend, ranging. Okay, let me see. Ranging, uptrend, amazing. So basically what we have here right now for gold, we have the overall trend is currently an uptrend. That's basically what we are having here right now. So let me draw my trend line from here, right? This is wrong with my trend line. Okay. Sometimes when you're analyzing the market, you can also use the trend as like a confluence. No. Okay, this is like what's going on right now, but the overall trend for gold is uptrend because gold, let's okay, this is 1006. Gold went from like 1006 to like 3004. So gold is basically uptrending right now. So this is our trend line, right? This is our trend line. And for gold right now, anything we're supposed to be looking out for is for a buy. But we don't just get to just buy. This is like showing us the market structure. Yeah, gold is always uptrend because it is going up. Because previously gold started from almost nothing. Let me even use the monthly time frame. Let me see if we have it here. Okay, gold started from 200. This is what we have here, 200. Started from 200 and then we started going up. So gold is like uptrending. But when the market is uptrending, doesn't mean sales will not happen. Sales are going to happen, but that those sales are basically retracements. So the overall trend for gold is buying. So now if you bought gold around 1400, you'll still be in profit. So let's go back to the weekly time frame. So for a market like this right now, what we should be looking at for is just buying. But there's something that price does. Oh, my pencil is not working. There's something that price does after like uptrending, it retraces, which is for a buying market, price will create a high. Let me draw the line so you guys can see it. How this works. Uh, let's see if this will work. Oh, good. Okay, let's see. Oh, I'm looking up for something that I would use to draw this line so you guys can see. Let's see if this will work. Oh my god. No, this won't work. Okay, let's see if this would work. Okay. Oh, let me improvise. So for an uptrend, we are having higher highs and then higher lows. So when a structure is broken for an uptrend, once market breaks a structure, price is going to retrace. Can you guys still see my screen? Seeing you now. Okay, great. Okay, I'm sharing now. I'm trying to look out for this arrow that I'm going to use to draw this thing out so you guys can see it, but it's not showing. I'm going to use this one instead. Okay, so for an uptrend, we're looking for an uptrend, right? And then this is what price did. Let's say price started from here. Sit on it. Let's say price started from this zone right now. I need to make this thing bold so it will show more. Okay. Price started from this zone where this arrow is right now. And then what did market do? Market retraced. Okay, I think this will work for now. Can you guys see it? Let me know in the chat if you can see it. Okay, great. Now, when price retraced, I'm going to forget about this small structure there. Let me just focus on the big one because this is the weekly time frame. When price retraced, what did price do? It broke the previous high that it created, thereby creating a higher high. So for an uptrend, markets will always create higher highs and higher lows. So since this is an uptrend, we're going to like focus more on the uptrend that we have right now. But for a downtrend, it is different, right? So when price creates a high, you wait for a retracement. Then when price retraces down to the zone that it broke previously, it's going to push up higher. That's basically what you look at for a buy market, which is the uptrend market. Now, if you want to look at for market structure, let's say we are using the daily because this is basically weekly, and most times I use weekly for my analysis. So let's say we are using the daily to like trade right now, and you know that one single candle on the daily time frame is 24 candles on the 1 hour time frame. Now, one single candle on the weekly time frame is 7 candles on the daily time frame. So it is definitely going to be like different. The structure, they are going to be different, but they will always align. When price is uptrending and it is uptrending from the monthly, weekly, daily, it is going to align, but their retracement might be different because one single candle is different from like the other. So now on the daily time frame, we have a break of structure here due to this high that was taken out, and then price retraced with this candle. Price retraced to this zone. Let me turn it. Price retraced here, and then market decides to break. Market decides to break from here. Now imagine if you did not wait for this retracement. This retracement happened for days because we have, how many candles do we have here? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. 2 weeks. This is crazy. 2 weeks. But if you go down to the smaller time frame, you're still going to see opportunities to either going for a buy or a sell. But this was being mainly retracement. So this is basically what happens on an uptrend. Once a structure is broken, you wait for a retracement and a buy confirmation to continue. After the previous high has been taken out, price is going to retrace to create a lower high and then breaks to create a higher high. Just like that, that's basically what market is going to do. So no matter the trend, once there's a break of structure, a retracement must happen. That is why I clearly said here, since there's a break here, price is still going to break more, and then it is going to retrace and then compounds by and then starts to rally. So for an uptrend, you should not be going against the trend. That's one thing. So aside you getting your candlestick confirmation, the next thing, even before your candlestick confirmation, what you need to look out for is the trend. Once you open your chart, this is me showing you guys how to like analyze the market so that you guys can like know how to like go about this trading thing. Once you open your chart, the first thing you need to look out for is what's going on in the market right now. Is price uptrending? Is price downtrending? You can actually do your analysis from the monthly. When I started my analysis from the monthly. My chart was rough. But for now, me personally, I don't really need to draw out from the monthly anymore. I can just look at it and see what's going on. And then I go to the daily to start marking out my support and my resistance and all of that. So you can start from your monthly and see what's going on in the market. Is price downtrending? Is price uptrending? Then if it is uptrending, what happened after price broke this high? Oh, This high has been taken out, but market has not retraced. That means you should be expecting a retracement to happen to be on the safer side. When you see a retracement and then a buy confirmation, that's when you start looking at to go in for a buy. But now when you go to your daily time frame, you don't really need to look at for this overall trend. What you need to look at for, once you know the trend that market is on right now, let's say this particular zone, we have an uptrend here for an example, you should know, okay, what is going on the market today, hence market structure. But I'm going to tell you guys the time frame to look out for your market structure for that particular day. What's going on in the market today? Market is bullish. Okay, now since price is bullish, what are we supposed to be looking out for if market is bullish? Let me draw this line out so you guys can see. Okay, so price is bullish today. Okay, this is where price started from. So market is bullish today. What should I be looking out for? Then when you know what market is currently doing that for that particular day, what you need to do is go down to your 1 hour chart. When you go down to your 1 hour chart, probably by then you should have been able to like mark out your support and resistance, but we're not going to be talking about that today. We're going to keep it simple so you guys will not the information will not be too much. That would be for our day 2 boot camp. So you come down to your 1 hour chart and then you look out for what market is doing. If price is bullish on the daily time frame, is market giving us the bullish confirmation on the 1 hour time frame, which means is market creating higher highs and then creating higher lows. If price is creating lower highs and then lower lows, that means it does not align. So you look out for what's going on in the market. The 1 hour time frame gives you the now market structure. Like, okay, this is what is going on right now. That is basically what the 1 hour chart gives you. So when you see a break of structure, you wait for a retracement. A break of structure happens again, creating a higher high, you wait for a retracement. Then when you see your retracement and your confirmation, you go in for a buy. You follow the trend. You don't go against the trend. We only your trade only hits stop loss sometimes when you go against the trend, but sometimes it's just liquidity sweep. But when you follow the trend, it keeps you safer. You just keep following the market. The market is at the front, then you just keep following from at the back. But you're not supposed to like go and stand in the front of the market and then start holding the market back because the market is going to hit you and then just go where it wants to go. So if you want to like after you've been able to figure out your trend, what's going on in the market, you come down to the daily and then figure out what's going on in the market for that day. You come down to you check your 4 hour, 3 hour, 2 hour, or maybe you just check your 4 hour and then come down to the 1 hour and see what's going on in the market right now. And then that gives you the confirmation for what you should be looking out for to trade for that day. The daily tells you, okay, I'm bullish today, I'm bearish today. If it is bearish, if price is uptrending, if it is bearish, oh, that means price is trying to like retrace kind of thing. Okay, that means okay, I should be looking out for a sell, a short sell since daily is bearish. If daily is bullish, all right, wait for a retracement. If you wait for a retracement and you miss the trade, don't rush it, let it go. There is always the opportunities to trade in the market is like it is uncountable because the market is going to be there millions of years to come. Market is going to be there. In 2070, people will still trade the foreign exchange market and they will still make profit from the market because the market is going to be there. You just have to like let the market go and then wait for another opportunity instead of trying to like rush and then enter for a buy at a very high position and then maybe if price retraces or does liquidity sweep, it takes you out and then price continues and then you're already in loss.
So
Do you
when we
guys
are in
understand?
when we are in bullish, we can wait for it to retrace, then we can now buy, right? But when we are in bearish, what do we call that name? So
It
is
is
it
also retracement, but the
it's also
retracement is not.
retracement? Okay.
Yes, market will always retrace when it breaks structure. Like I said, since we are using this uptrend as an example, this is basically like for buy it. For sell it is different. The trend is different. Let me see if I can see any. Okay, BTC is like giving us a sell structure, but the overall trend is not for a sell. this sell you're seeing here is basically a retracement, but you can see that it is different. When it is uptrending, let me look for when it is going up. Everything here is for a sell. Now you can see that for a sell, it is coming down, right?
Mm-hmm.
For a buy on gold, it is going up. It is going up. We're seeing like prices break, it will come down, it will break, it will just keep going. But for a sell on BTC, it is coming down. If it comes down, it will retrace. It will come down, it will retrace, it will break the structure, it give us lower highs and lower lows. It does its thing, it will still come down. Basically, this is like if structure is downtrending, right? If you go down to the smaller time frame, maybe the 5 minutes time frame or like 1 minute, 15 minutes, if market is bullish or bearish on the higher time frame, you're still going to be seeing different trend due to those are the small time frame. It is more like it is very, very noisy. It gives you different trend when in the market. But when you are looking at it from the higher time frame, it gives you like a much like realistic trend of what's going on in the market for like a very long time. So you should know what you should be looking at. Let's say for good now, the trend on the weekly and daily, it is giving us an uptrend. But if we go down to the, let's say, 2 minutes time frame now, okay, 2 minutes doesn't work here. Let's say 1 minute time frame, you're going to see that market is going up, it is coming down, it is going up, it is coming down. Now if you're using 1 minute to analyze your market, it is not going to always give you what you should be expecting. Why is this not showing? Okay, it's not going to always give you what you should be expecting, because 1 minute candlestick, they are just very, very noisy, because each candle is just 1 minute, unlike where you have like each candle to be like 1 hour and all of that. For the 1 minute, you're going to see price is going to go up, to come down. But you see it is going up. But you see again it is coming down. So it is going to be very, very noisy. So it's better to look at for your trend from the higher time frame. Let's say 4 hour, daily, monthly, and all of that. Then you come down to 1 hour to look at for like the particular day market structure, which is if you want to like trade, you look at for daily buyers. They call it daily buyers. What's going on in the market for that particular day. Then you come down to 1 hour to like confirm everything. Then you go down to the smaller time frame, which is either the 5 minutes, 15 minutes, 10 minutes to like enter for your to look at for your entry, which probably like candle confirmation is going to still be there, gives you like your entry, then you can enter the market to set your stop loss, and then that's it. That's like for the retail type of trading, because we have like the what should I call it? We have the retail traders, which is basically the beginner traders that focuses more on support and resistance, candlestick confirmation, and then we still have like the more advanced people that uses liquidity sweep, fair value gap, order block, and stuff like that. But we're going to get into that as well. So if you guys have like any more questions, please let me know on the chat. I think that is where we're going to stop for today, so it shouldn't be like too much information. There's been a break of structure. Break of structure for where? Is it for gold? This is the 1 minute time frame. This is actually the 1 minute time frame. So
The noise is too much.
yeah, the noise is too much on the 1 minute time frame. But on the 1 hour time frame, there's actually a break of structure, which is this particular place. Price has broken this high. This used to be the high. Let me see this particular place here. Price
So
has broken.
when we say chart, you first of all look, I mean, after checking the market structure to see whether it's uptrend or downtrend. So
Yeah,
we have to mark out our support and resistance,
resist.
right?
So this particular place that my line is currently,
Okay.
I want to make this smaller. Don't know how to go about it. Let me leave it. This particular place that my line is currently. Did I just delete it first? Let me draw another one. Okay, this particular place that my line is currently, this place used to be, it used to be a resistance.
Hmm.
It used to be a resistance. Like price got to this zone and it was rejected. Now price broke it. So now this place is now going to be a support.
Okay.
Support is like the floor. Support is the floor, like the ground that I'm putting my legs on right now. That's support. And then my ceiling is my resistance. So
So,
when price breaks my ceiling, if it comes down, it will just stay on my ceiling and then continues to go. And
so
then
that
when
is the
price
point we can buy.
Yeah, well, yeah, since there's a break of structure now, you just wait for a retracement before you can think of buying to the support and look out how price is going to respect the support here. If price breaks this support and continues to fall down, that means the support is not valid. But if price breaks this support and then confirms buy, rejects this zone, confirms buy, and then you know that okay, yeah, price is going to respect this support. So it's not just about having support and resistance. You need to see that price is respecting that particular zone. So it keeps you on the safer side, not just like you rushing to like enter the trade just because that place is a support. I don't know if you understand.
Yeah.
Same thing for a sell, right? Let's say a support. This where should I use now? Let me look for a zone. Okay, okay, great. I've seen one. Good. Let me draw it out. We have this zone here. I'll delete this and draw another one. This zone here. Okay, I have this one here. This zone used to be a support. Yeah, this particular place used to be a support.
The
Here,
price
right
break.
now.
Mm-hmm.
Then price came down and it broke it. It broke below. And then this is the 1 hour time frame. It broke it and then price sold for how many hours? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 hours later, price was selling because price broke the support that we have here. Then the support became a resistance. But when price came back here, the resistance did not hold. Do you guys understand?
Yes, yes, we do.
The resistance did not hold, and then price broke above the resistance, and then price started to rally up. Even when price came back, it respected as a support, and then market flipped. So a resistance can turn into a support, and a support can turn into a resistance.
Okay.
So do you guys have more questions?
You know what? Tomorrow you can eat.
Do you guys have more questions? Let me check the chart. Zoom user, yes. There will probably be a retracement. We just have to watch out and see what the market does from tomorrow. Market is going to open tomorrow. By this time tomorrow, market should be open, if I'm not mistaken. So we just have to watch out and see what it is going to do for the new week. So, any more questions? Okay. I think we don't have more any other questions. So you guys don't have any other questions. Do you
Sorry,
guys understand
I
what?
want to I want to clarify something again. So at the point where we have that support that and the price broke, right? So the support
Yeah.
will become resistance, and when the price become resistance, we'll have to wait for it to retrace again before we now buy or
No.
sell.
Okay, let me
Before we
share my
sell,
screen again.
okay.
No, no, no. No, let me share my screen again. Okay, so all right, so this particular zone now, where did I? Okay, this was where I used. So right
Mm-hmm.
now, this particular zone was a support, right? Let's just see
Yes,
here. Price has not broken. It was once a support, and then price even touched here, and then it was rejected, and then it went up.
again.
But later on, price broke it, right? Price
Mm.
broke it, broke the support, and when the support is broken, it turns into a resistance. So price broke the support and market fell. It came down. Now it has turned into a resistance. Now, once that support has been broke, we should be looking out for a sell. And this is the 1 hour time frame. So market sold for like 10 hours later. But in as much as the sales were not really, the candles were not that big, but price still sold for like 10 hours. That's like almost half of the day. Then price started to like rally back up. The buyers, they've gained momentum and all of that. Price started to like rally back up. Then price got to that support that it broke that turned into a resistance. And then market like somehow rejected, but buyers were like in control. So that rejection did not hold. What did price do? Price broke it.
Mm.
You can see the
So
rejections here.
exactly. So we will now wait
The
for the
rejection,
retracement and now sell.
yes. No,
Okay.
you wait for the retracement and follow what's going on the market right now, which is
On
the
the
buy.
market. Okay.
Yes, which is the buy because price did not respect that resistance. So there been a market structure shift. So when a market structure shift happens or when a change of character happens, you should be looking out for a reversal and then a buy confirmation for that uptrend. But if price does not give you a buy confirmation, if price decides to break this zone, maybe price came back to this position and then this candle did not hold, this particular candle, and then price decides to like just come down to break this zone that we have on here, you should not be looking out for a buy anymore. You should be looking out for a sell. But since price respected and then gave us a bullish engulfing candle as a confirmation and all of that, then we had a buy. And price just started to like rally up from there. And it's been buying since then. But these are just like the other things to like look out for if you want to like enter a trade. We have the candlestick confirmation, we have like the trend, we have our support and resistance and all of that. When you have like all this confluence and you wait patiently for market to come to you, it keeps you on the safer side. Like this retracement, it took, I think, let me count the candles. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Almost the full day. You just have to be patient for like almost 24 hours for you to be able to like get a good confirmation and then know where to enter the market. So that's
Okay.
basically it. Do you understand?
Yes.
Okay, so I think, is there any more questions? If you guys have more questions, let me know in the chat. More questions? I think we spent almost 2 hours on this call. 1 hour plus. So I just hope you guys were able to like get value. If you have more questions, you can drop it on the group. If you have more questions, just drop it on the group. And also take your time to like analyze, not analyze, just go through your chart and then identify like a doji candle, a gravestone doji, a bullish engulfing, and hanging man. Then send it on the chat and then tell us like what you think price is going to do after like what it has done. If you
Hanging man, right? Hanging.
yes, hanging man, and then you
Yeah,
tell us what
I'm going to send that PDF. You know that PDF we used to
the
send to them.
candlestick, the candlestick
Okay.
information.
PDF. Yeah. Some
Okay.
people might
We'll be
not
waiting.
go through it, some will go through it. But those that go through it, congrats.
If you go through
We'll be
it,
waiting.
just if you have any questions, maybe probably you're confused about any part, just send it to the group or you can DM me personally. I'm going to like assist you so you can be able
Okay.
to understand it. Yeah,
Okay. Okay. Thank you for the permission.
no problem, no problem. We're here for everybody.
Which
So
group?
it brings us to the end of our day one boot camp. So this is basically day one. We're going to have like other sections as well. And I hope you guys were able to like get value. Because me, I was able to like even learn something new. It's crazy. I hope you guys are able to like get value. And thank you guys so much for being on this call to the end. Trust me, I don't take it for granted and I'm happy that you guys were able to like get value. And I'll see you guys in our day two. Let's
Thank
go.
you, coach. We are grateful. At least it's not easy
So
to
when is
still
the
be
next class,
serving
please?
hot value.
Let me note
I
it down.
mean,
When is the second class?
That would be next week.
Next
Next week.
week what?
isn't it?
Because we work and we need to I need to know whether I'm going to cancel my shift that day. I don't want to miss this.
Probably tomorrow is Sunday, so probably tomorrow I'm going to like schedule the date and I'll drop it on the group so that you guys
Okay.
can get ready. So
Okay.
I feel the reason why more
Yes.
people did not really do it because this call was somehow impromptu. But either
Mm-hmm.
way, we're going to like update earlier so you guys can be able to like join.
Okay.
So,
Thank you.
guys, whatever you're
Bye,
learning from
guys.
here, Coach, I want to say something. Whatever you're
Yeah.
learning here, take it serious
Coach
because
Gift,
it's
what are you doing in Nigeria? Why not
I'm coming.
Dubai with
I'm saying
eh?
something. I'm saying something.
Okay.
Guys, this thing you're learning here, take it seriously. When I mean take it seriously, if somebody should show you this technical analysis or market structure alone, they will charge you like millions. I remember asking for somebody for I want to pay for somebody's strategy, and the person told me 2 million naira. Right?
That's great.
For you to, I told you, right? For
Yeah,
you
you told me.
to, for you to get this for at least for, let me call it free. I think you should value it and put it into practice. Don't just come and watch or just listen and go to sleep. For somebody to open their chat, because normally you pay $100. A person no dey teach you one thing about candlestick. So now that like it's now in this space, guys, better take your time, go to your chart. If you don't have trading view, download it. If you can't download it, you can access it through Google Chrome, right? You
Yeah,
can
you can use
access
the
it.
website, yeah. So
Yeah, Chrome. You can access it through Chrome. Anything you learn, even if you draw jargons on your chart, post it on the group.
send it to me or send it on the group. Trading view, yeah, you can pay for the premium, but me basically I use the free plan.
You
I
don't
don't pay.
pay. So analyze and send it to the group. Check if there's anything wrong, there's always room for improvement. So don't be scared to go through your stuff and send it to the group or send it to coach or me for clear for clarification. So you guys do not take it for granted. Don't joke with it. Let me who I will take you now. Go if you go and message this guy, what's his name? That guy that taught D how to trade. Something that guy, I don't know. But if you go and message him, you go to hear how much to learn. But now
Wow.
you're getting access to it for free. Now free, I'll call them. So take it seriously and go through your chat and whenever there's a class, don't miss it. Okay? Whenever there's a class, don't miss it. Take your time to join the class and learn more. Because if you're able to understand how the market works, trust me, one, you won't be depending on signal, and two, you can see some signal that might be going against the market and you can choose not to. It's not like you will not you ma
They can choose not to enter. Like, when you
exactly.
see something and then you're not really okay with it, you'll be like, this market should do this instead of that one. Then you just be like,
Mm, you
kind of
get
thing.
so you can just see it and just be like, I'll pass. But if you can see it and you can be like, okay, this market, I'm still having, the same confirmation, and I have
Yeah,
this, like what I'm seeing is actually the same thing as person. Okay, let me go for it. No, sometimes you can decline and it will go in your favor. The market can be so tricky. It will go like in the
exactly.
direction the person is talking, but it is still good to have the knowledge of what you're doing, right? For you to be able to um make money in the forest space. So guys, do not take it for granted, right?
Guys, good night. And I'm
Thank you,
so excited that you guys
coach.
were able to like, get
So what I
value.
was asking you, why are you not in Dubai with Coach Dami?
I will soon be in Dubai, don't worry.
You must have something doing in Nigeria for you to stay back.
Basically what I don't do any other thing aside trading. Trading is what I do full time.
Oh
And that's
yeah.
basically what I do. Yeah.
Okay, okay,
I want
okay.
to go and marry her in Nigeria. Don't tell her to leave Nigeria. Thank you so
So
much,
guys,
coach.
I'll see you
Thank you
guys on
so
the group
much.
Yeah,
chat.
appreciate.
My name is
You're
Biso.
welcome.
In case I start disturbing you with you and Coach Dami with my graph and jargons.
No problem. We're here for you guys.
Okay, I've sent the candlestick PDF. Coach,
Okay,
read.
okay, okay.
All right.
Thank you.
All right. Good night, guys.
Coach, I bet should we this call they recorded? You don't go.
It's
Hey.
recorded, though. Don't worry.
Okay, thank you.
All right. Okay.